President Trump today escalating trade tensions, threatening a 50% tariff on EU goods and a 25% levy on imported iPhones. The announcement unsettled global markets, as you can imagine, leading to a drop in major stock indexes, a rise in gold. Trump's aggressive stance, stemming from frustration over the negotiations with the EU, is pushing for more American production. It's had a huge impact on Apple. The shares have fallen, reflecting concerns over potential price increases if they need to move production of the iPhone to the US. Let's bring in Professor Tim Harcourt from UTS. This is exactly what Trump said he was going to do to make America great again. The rest of the world and the markets not necessarily liking it or agreeing at this stage.
No, and we thought we'd just got over the tariff conflict with China with the 90-day pause, and now it's the EU, one of the most pivotal trading relationships of the world between the EU and the US. So obviously a concern for markets and for the world trading system.
Remind us, why is the EU in Trump's sights?
Well, the EU are notoriously protectionist. Australia's had to bear the brunt of their agricultural protectionism for many years, and very slow with trade negotiations. So President Trump's not the first person to get frustrated with the EU in terms of trade negotiation. But it's certainly interesting, given that most of his offshore manufacturing wants to move back. That is in China and India and Taiwan. It's not in the EU, so to speak. It's quite a different relationship, and a lot of it's to do with components and intellectual property and some of the processes that the EU undertakes in terms of trade.
Let's talk about Apple, because obviously, there's two pillars of the global economy. There's trade and then there's Apple. The idea of iPhones in the US, first when the tariffs came on China, Tim Cook's idea was, let's move production to India. He gets a call from President Trump saying, no, it has to come back to the US. What's the implications for the iPhone if it goes back to the US for production?
Well, probably prices. I mean, probably cheaper to make them in India. Probably some concern about how they're going to run their global supply chain if they have to pull it all back to the United States. It might be that it might be a portion of it, and I think it's interesting because Tim Cook and a lot of the tech billionaires sort of got behind Trump last year in the election. I think I remember you citing that on one of our interviews, Aaron, that a lot of the backing had gone, which traditionally the tech industry tends to back the Democrats, but they've gone very strongly in for Trump. They're either backing a winner or they're trying to influence him, but they may not have the influence they thought.
Let's have a listen to what Trump said about who will be impacted.
It would be more. It would be also Samsung and anybody that makes that product. Otherwise, it wouldn't be fair. So anybody that makes that product, and that'll start on, I guess, the end of June. It'll come out. I think we have that appropriately done by the end of June. So if they make that product. Now, again, when they build their plant here, there's no tariff. So they're going to be building plants here. But I had an understanding with Tim that he wouldn't be doing this. He said he's going to India to build plants. I said, that's okay to go to India, but you're not going to sell into here without tariffs. And that's the way it is.
This all sounds great for the US, Tim, but what if the rest of the world says to American companies, you have to manufacture your products like a Ford in Australia to sell Fords in Australia?
Well, that's exactly right. If we all said, make in Australia, make in America, make in Malaysia, make in South Korea, there'd be no trade, and things would be incredibly expensive, and we wouldn't have the same growth in the world economy that we've had over the last 30, 40 years. So they seem like simple solutions, but in actual fact, they can make things a lot worse for consumers and workers and the overall economies. We've seen some of the benefits of open trade and open investment. It's a matter, I think, of Trump giving the impression that he's fighting hard for America, but ultimately that the world trade system depends on global supply chains, and you can't have everything within your own border.
It's making it really hard for companies to be able to forecast. We're seeing results coming out in companies from hotels to airlines saying we are seeing an impact. It's been a good first quarter, but we just can't forecast what happens from here. That makes it pretty difficult for central banks as well, right?
Well, that's right. I mean, the uncertainty over the tariffs are probably just as disturbing as the tariffs themselves, because you get a lot of on again, off again, new announcements every week, and markets and central banks don't like uncertainty, nor do governments, particularly governments such as China and India. So that's creating some jitters, and when there's uncertainty, you pull back investment because you don't know where the tariffs will be. You don't know, what other legislation is going to be passed. Whilst, in Australia, for instance, when we reduced tariffs, we had a schedule that everyone knew about, and people knew, when and where to make their investments.
I guess the issue with being on the wrong track is that quite often getting back onto the right track can be dramatic and can be unprecedented and unpredictable. Is it fair to say that the US, with its spiraling debt, it's every year, every 6 months, a conversation about raising the debt cap, the debt ceiling, that there was always going to be a time where one of two things were going to happen? That bonds, people would stop buying and the US would stop being able to pay back their interest on their debt repayments, or two, a Trump will come along and say we need to change the world, and that's what we're seeing at the moment. Which do you think would be worse?
Well, I think you're right, Aaron. In a sense, this is to some extent about the fiscal situation in America. I mean, Trump not only wants to see more manufacturing in America, he sees tariffs as a way of raising revenue. He's just got that view of old-fashioned view of tariff revenue. But I think ultimately he's a disruptor, and ultimately he thinks he's a great negotiator. Now, I don't know whether this is some saber rattling to get the European Union back to the table after always stalling negotiations. But to some extent, there is an element of disruption and negotiation in terms of tactics, often perhaps without thinking of some of the long-term implications.
Yeah, very much so, and you make a great point there. We talk about Apple, a company worth $2-3 trillion. I mean, I don't know whether it's 2 or 3 at the moment. The fact that there's a trillion in between shows just how big that company is. The reason I mention it is President Trump singling out Apple, essentially, despite what we believe to be great relations between Tim Cook and also Donald Trump. But is the point that if any company has the money to be building products in the United States as opposed to outsourcing for cheaper reasons, it should be Apple? And the other issue then becomes, does the US have, I guess, not just the workers, but the ability to create high-tech workers these days through its education system?
Yeah, I mean, I think modern manufacturing is a lot about high levels of technology and high levels of skill. It's not the the large, low-skill manufacturing of 400 years ago. It's a very different position in terms of manufacturing. And I think with Apple, it's like any example Trump can make. I mean, he's got in very hard against diversity, equity, and inclusion, and anti-Semitism. So he hasn't taken on all the universities, he's taken on Harvard. And Harvard hasn't done anything about anti-Semitism or DEI, and they've lost their ability to take in international students, and they've lost their government grant. And that means other universities may decide to be a little bit more amenable. I think he sees Apple in the same way. You take a big, symbol of American, capitalism, Apple, global capitalism, just like a Harvard, and you lay down the law to Tim Cook. And if you can get a result there, then the other companies will just follow suit. I think he's treating Apple like he's treating Harvard, I think.
Let's talk about Taiwan through all this. Obviously, TSMC is one of the largest exporters for there, and chip making in Taiwan is huge. As the US brings a lot of its manufacturing home, what happens to countries like Taiwan through all of this?
Yeah, well, you've had the recent experience in Taiwan, as I did with the Airport Economist Taiwan episode, where Cheney Ho, the sort of father of IT manufacturing in Taiwan, was saying he had already moved some of his production out of Taiwan to the United States when Trump came in the first time. So I think some of the more savvy Taiwanese companies have already thought about this, and they've moved away from China. Quite a lot of Taiwanese companies are moving to Bangalore in India, and we saw with the airport economist Bangalore Chennai special some quite a lot of follow on from the Taiwan episode with those links. So I think to some extent it's not just about moving to America, it's retaining some element of your production in Taiwan and then looking at markets that are neither China nor America, like India, like Southeast Asia, like some other markets around the world.
Yeah, all right, we'll leave it there for now. As always, Professor Tim Harcourt from UTS, host of the Airport Economist channel right here on Ticker. Appreciate your insights.
Thank you, Aaron. Good on you.